This is a review of round 3 of the simulation. So we see that for the leaderboard, a top team earned 572 points, and most teams earned over 400 points, which is what you're shooting for each round to get to the number of points you need cumulatively for an A in this project. Remember, for this project, 20 points were for completing the solo practice game, which most of you have done, and you had to have a score over 1,500. And then the remaining 20 points you'll earn when you have a cumulative score over 2,200 points for the team competition. So far, we've completed 3 rounds of the team competition. Round 3 is what I'm reviewing today. And then round 4 is due on the 24th. And I moved that date to be after the midterm, so you have time to study for the midterm and not worry about the simulation between now and the midterm, which is on October 20th. Now, the current round points they will be added to your previous round's points, and then you'll see when you look at your overview page, you'll see your total points. So far, a couple teams are getting close to 2,000. If you are at above 1,200, which all but 4 companies are above 1,200, you're on track. If you're close to 1,200, you still have 3 other rounds to get the remaining points needed to get to the 2,200. So just about 95% of the class is at the where they need to be or higher than where they need to be on total points. Now, if we look at what's very important here after points is your gross profit margin. You started at 40%, and some teams are now touching or going above the 60% in gross profits, which is excellent. If anybody's below 50% at this point, that is not ideal. So you shouldn't be, the teams that are still in the 40% range, that's low. You want to really get that up above 50, and this should be increasing every round. And then when you increase your gross profit margins, it helps increase your earnings per share, which increases your stock price. And we have one team here, Team 16, at $73 per share, and they beat 99.8% of all the domestic teams in the U.S. over the past 24 months. So that's pretty astonishing that a number of teams here are above 90% in this class. And typically, like I've said before, my courses in the simulation and finance typically rank in the top in the country, typically beating some of the even Ivy League schools and top business schools. So as students, you're doing very well in the simulation. And if you look at the total class, there's only a few teams that aren't above the 50 percentile. It means 89% of the class is beating 50% of the students across the country over the past 2 years. And it makes up, I think, over 5,000 teams playing this simulation. So we're doing good as a class. Now, I'm just going to go up here. I'm going to look at my solo practice as to help give you ideas of what I would have done moving from doing my inputs for round 3. So, this is basically some retro advice, what I would say to do. So first thing you should always do is start out and review your overview points and see here, where are you losing points? I'm losing points in my equity and ROI, I think, because I borrowed some money. My earnings per share is up. Most every category of earned points. I earned a total of 748 points in year 1 over year 2. So this is really year 2 results. So now I would check over and read over my assessments. I would look at the charts for the industry and my individual charts, specifically looking at my performance charts to see, especially at the very bottom, I want to see how is my forecast compared to my demand to get a good idea. And I'm pretty much meeting all my demand except for sedan. Now I could check over the industry, see how I compare to other companies, review my financials, and finally get back to sales. I have now to make my year 3 decisions. Now, you've already made your year 3 decisions. I'm just reviewing how I would have done year 3 to help fill in any questions you might have, give you some hints or some ideas of how ideally it could be done. And of course, every round you want to look at the importance factor. So I want to, and you can go over the customer expectations, but for something that the customers have only 5% importance factor on their buying, I can actually go below the requirements. So I want to build a car, hopefully that's better than what I built last time. And I always like to price my cars with a high price so I can increase my profit margin. So I have my operational investments are helping, and I was able to increase my profit margin by 3%, which isn't the best, but it still isn't terrible either. So I say if most teams can increase their profit margin between 3 and 5% each round, they're going to do pretty well. And remember, for the sales forecast, a lot of students struggle with the sales forecast. That's why you want to go to the student manual, and you want to open up that student manual to get an idea of what is this is year 3, the average sales if every company made the same exact car. So this just gives you a box, a starting point, and if you make cars better than the industry, then you should probably forecast higher. If you make cars that are not as good as the industry and not as well advertised, you should probably forecast lower. So now that I have an idea of a forecast here, I'm going to put in my numbers and, repeat this process for every car. And again, I'm hoping to do better on the amount of features I can offer to my customers. And I want to see here now, my profit margin went down. And that's not ideal. So I'm going to have to pull back in some areas to try and sometimes I go too low, it won't work. So now here I got up about 3%, so I'm good. I'm going to move forward. And so so as long as those gross profits are going up, the results are going to be good for your company. And that's the key. And you'll see here that for truck, I was not able to really beat it by much. So I might have to actually pull back a little bit. To try to get this up a little bit. So I'm definitely going to need more operational cost reductions because I'm struggling to get those profit margins up. And that's not where I want to be as a company. And you'll see each round, the customers' expectations are going up. So it's getting hard to beat my expectations. And I'm only improving by a little bit here. So I'm trying to get it to, I might have to sacrifice engine power a little bit here to try to get that up 3%, which I finally got. So not a huge increase. Okay, so I skipped over the marketing page because it takes a real long time to do. So I just tried to put money where customers would be most effective based on the student user guide and try to keep towards the higher end of the marketing expectations. So now here I have to buy a new plant to meet my production requirements. And I'm going to increase my operational investments here. I'm going to be doubling them to try to keep ahead of, so here I'm going to actually need 2 plants to get to 43. And again, I'm going to want to see, I started out here at 12, total investment of 12 million. So I want to invest another 12 million, doubling my investments, thereby also giving me 100 points on the simulation. But this round I'm spending a lot of money on building factories so I can make my production and increasing my operational cost reductions. And this is the only way I'm going to be able to, these operational cost reductions, to keep up with customer demands and keep my profit margins high as well. but I'm selling more cars. So that generates more profits for me to be able to generate enough profits to pay for these extra plants and operational cost investments. All right, so let's see at the bottom here. I have 60 million surplus. So I have enough money actually to go back to production now, and I can actually spend a little bit more money in these operational cost reductions, which I'm going to invest this money in this area to ensure that in the future I'm going to have the profits I need by making, receiving these cost reductions. And there's probably a better strategy than spreading it out as evenly as I'm doing, but that's something you can work on if you think there's a better strategy for paying that through. So now I see I have a $26 million surplus, which I think is enough to cover me in case I don't sell everything I expected to sell. But I'm also going to buy back some stock to help reduce my outstanding shares a little bit. So put $1 million there. So now I have a $21 million surplus, which I think is enough. So let's see what the results would be for me if I complete round 3. Okay, so the results are in, and I made 374 points, which is close to 400, which was sort of my goal. So let's see where. So I did increase my revenues by 30%. My debt ratios were better. Okay, so my profit margins on the operational went up 5%, but on the gross went up 5%, but the actual operations and net were only increased by 1% because I had to spend more in advertising, and that took the extra gross profits out that I could have earned because of my increased advertising budget, and that filtered down to my gross profit margin. So my total asset turnover was lower, and my return on assets were lower because I purchased a lot of assets last round. So when you purchase a lot of assets, your return on assets and total asset turnover is going to suffer because of the fact that, the return on assets is measured by the size of your assets you have, and the total asset turnover is measured again by the size. So the bigger your asset base, the lower this return is going to be if sales don't increase at a faster rate. But this is a building phase, a building round. So I expected to take a hit on that, and I'm okay with that. So my return on equity went down a little bit because my equity grew, but not as fast as my earnings. And these are all things we learned from Chapter 3. So if you study Chapter 3, you should, remember some of these. So my forecasting was pretty much flat. I did have a surplus, but the surplus was only 2 million, not the 21 million I expected. So there must be some unsold cars. And I had operational investments gave me 100 points. So if I look at the production, I'll see what went wrong. So I had unsold, about 200 unsold cars. And I attribute that to I wasn't able to make really great cars last round. So I over forecast by accident because I had to lower all my features to try to get that profit margin. But now this round, since I invested the money in my operational investments, I'm able, and this you see my operational investments were 1,800 last round. Now they're 4,800 in round 4, and I'm able to move up my profit margins from 48 to 60%, which is really going to help push up my points when I'm done with round 4. So I'll complete this in the next video. So just to give you a heads up that this is your goal, you got to get this gross profit margins at least by 60 points heading into round 4 as best you can. And the key is these operational investments. And this is not new news. This is something I've continued to say in most every video. So I hope this is helpful for you in understanding your results for year 3 and some ideas moving forward into year 4. Thank you for your time. Have a great day.